And so if a lender quotes you a certain rate and it sounds amazing and it sounds too good to be true, just be cautious. It might actually be too good to be true. Instead of just having a computer look at it and just saying, yeah, your application looks okay, I'm going through all of your documents and I'm trying to piece it together and doing the best I can to make sure to get you to your goal.
So we talk every day with folks that are coming up to Fairbanks and need a place to start. They're sitting in either Florida or Texas or California, and they're like, I want to come up to Fairbanks, and I'm not sure how to even get this thing off the ground. And one of the first things that I typically tell them is that, well, you need to talk with Bethany at First Rate Financial. So I brought Bethany here so that way we can have a discussion about how we can get started, how we can even attempt this pre-approval thing. And if we wanted to even take a more low impact version of this, how we can even get prepared for doing that. So I've got Bethany here with me, and let's talk a little bit about the pre-approval process.
Yeah. Well, thank you, Justin. Thank you for having me. My name is Bethanie Yoakum. I'm with First Rate Financial here in Fairbanks, Alaska. We are a local broker. And so we've been in Alaska for about 15 years and in Fairbanks for about 5. And I've lived here for 10. I love the Golden Heart City. I've made it my home. I came up here, just a little bit about me, came up here with my family. My husband was in the military, so we also made the move to Fairbanks. So I totally understand everything that you're going through and feeling. And I've made the trek across the United States from North Carolina and Ohio to Alaska that we now call home.
Yeah, so you've been there, done that too. So
yeah,
you've got the T-shirt, got the experience.
Yeah, exactly. Got the T-shirt.
Got the T-shirt. So when it comes to, you mentioned a mortgage broker. Can you talk a little bit about the difference between a typical mortgage broker and your brick and mortar lender?
Yeah. That's a really great question, and thank you for asking. So what a mortgage broker does is we shop large national lenders for the cheapest rate for you. So instead of you having to go to multiple lenders and getting every time you try to get a rate quote from somebody, they're going to say, well, I need your application. We're going to have to check your credit. And every time you get your credit checked, it's just a little ding on your credit. Every time that you're looking to add debt to your financial picture, it's what's called a hard hit. And so as a broker, what we do, instead of you having to go do that and get that ding multiple times, we shop for you. So it's one application, it's one-time check on your credit, but we shop 5 different lenders that we use, and they're national wholesale lenders. Yeah, so it works better for you. We just shop around to get the best rate for you.
Right on. So with not just shopping for that rate, that sounds like it could definitely save some folks money. Are there other areas that save buyers money just because you guys are mortgage brokers?
We also do not have any fees. So we don't have loan origination fees. We don't have processing, underwriting, doc prep, appraisal, all those things. A lot of lenders won't tell you about, but they're just kind of hidden in their cost estimates. And so if a lender quotes you a certain rate and it sounds amazing and it sounds too good to be true, just be cautious. It might actually be too good to be true. They might be charging you a lot of points or a lot of lender fees. Some loan origination fees are what we call discount points, which discount points in a little nutshell is essentially the cost of the interest rate. So just be cautious of that, and don't just go for those things that you find online. They definitely, online lenders do like to do the whole kind of bait and switch. They want to tell you the lowest rate that you could possibly get, so it looks amazing, but really it's costing you $20,000 in the back end. So just be cautious of that. We'll let you know.
Yeah, some of those folks that pop right to the top of the search page when you're like, oh, I've got a VA loan. Let me hit VA. Who's going to help me with a VA loan? Click. Not to name names or anything, but.
Yeah, exactly. You don't need to throw anybody in the bus, but yeah, just be cautious of that. Like I said, if it sounds too good to be true, just be cautious.
For sure.
In this world.
So if we wanted to get in contact with you or we wanted to start the application process, we can just go straight to your application link, and we'll put that down in the description below. So that's going to be there. So if at any time we're like, all right, we just this is all awesome. Let's just get going. That'll be down in the description below. As far as what we would need to get started, or even start talking about the pre-approval process, because I mean, we're already saving money just by having the conversation. What are some things that we need to get our hands on, get started?
So to get started, the first piece is actually going to be to click on that link and get that application piece started. That's going to be basically you're just opening the door to enter the room, right? And so if you don't have everything gathered, that application really should take you about 20-30 minutes to complete. It's going to ask you basic information like your name. We do need a 2-year address history of where you lived for the past 2 years and a 2-year working history. If you don't know exactly how much you make, that's okay. We do our own income calculation. I'll talk about how we do that in a little bit and what documents we need. And then just basic information about, bankruptcies, foreclosures, things like that in the past. It's all just a very typical part of the application process. Once that's done, we will pull that application in, we will check your credit, and then we'll send you a link to a secure portal where you can upload the documents that you need. Those things, very typical, just, 30,000 foot. We need 2 years of W-2s. So at this point, it would be 2022 and 21. But 2 years of W-2s, most recent 30 days of pay stubs, most recent 30-day bank statement, your driver's license, just to verify that it is you actually applying for the mortgage and not somebody trying to get the mortgage on your behalf, because that mortgage fraud is out there. So we try to be cognizant of that. Yeah, super simple.
Right on. And you had mentioned the where you've lived for the past 2 years. What if we've been renting for the past couple of years?
That's totally fine. Just put the address. It's actually going to ask you how much you rented for. So that's going to be a question on there once you answer that. The application just kind of walks you through. So, it's like SMART. So as you answer one question of like, oh, okay, you answer this way. So we go down this rabbit hole. And so we'll ask you how much you rented for.
Okay. So if we should be, kind of aiming for certain numbers or trying to get to a certain point to make sure that we want to get pre-approved, are there minimums that we need to be shooting for in terms of our credit score or debt to income ratios?
Yeah, that's a big question too. So it all depends on your loan type. So the basic loan types, you have your government loans, you have your VA, so your active duty or your prior military, in order to be eligible for that VA loan. That's a government loan. And then also you have your FHA, that's backed by HUD, Housing and Urban Development. Then we also have another loan that could be possible. We offer it, and it's not the right choice for everybody. It's a little more difficult to get qualified for, but it's called a USDA Rural Development Loan. So those loan types are going to have lower credit score requirements. So we can go down to 600, sometimes 580 on those. And then your government loan, your non-government loan are your conventional, your Fannie Mae, your Freddie Mae products. And so those we could typically go down to as low as 620. You are going to have better pricing. And by pricing, I mean your interest rate is going to be more favorable to you if you have a 700 or above credit score. So
let's say we go through the process. We've got all of our documents. We've got our credit score. We've applied, and our financial situation just isn't where it needs to be in order to get pre-approved. Are there steps that we can take to help kind of decrease our debt to income ratio, help increase our credit score, things like that over a period of like 6 months or so or more that can help kind of fix our situation?
Yeah, definitely. So another piece that makes my team different is that I'm looking at every single file. I'm looking at every single application myself. And I have a team that helps gather all the information to expedite things moving forward. But instead of just having a computer look at it and just saying, yeah, your application looks okay, I'm going through all of your documents and I'm trying to piece it together and doing the best I can. to make sure to get you to your goal, right, of what you want to purchase and the goal of homeownership. If we can't get you there at this moment, my team and I will walk you through what can happen and what steps you need to take in order to get to the goal that you have. So our goal is to help you out. We're I mean, I say mortgage broker, but really it's a mortgage advisor. So it's not just, yep, yes, no, yes, no. We're going to walk you through what steps, whether that could be credit, paying down credit cards, adding somebody new to the loan, saving up. How much do you need to save up for the down payment and closing costs, things like that.
Thinking about moving to Fairbanks? Well, click on the link below for my free relocation guide where I talk about top schools, top neighborhoods, and so much more.
You also had mentioned desired debt to income ratios. And
Yes.
so that also is going to differ depending on your loan type. So with your government, like with your FHA and with your VA loans, we can go much higher. One of the reasons I really love VA loans is VA looks at loans differently. And so they try to look at it where we do everything in our power to get a veteran into a home, right? If it makes sense, we're going to try to make it work. So I love that about VA. They really care for their veterans. FHA, again, you can go higher debt to income ratios with an FHA loan. And then with conventional, we're pretty much capped out at 50%. They don't allow for more than 50% debt to income ratio. And we use the gross income. So that's another thing. It's not your net income. We use your gross income. And there's some averages in there depending on what, how you're paid. Are you salary? Are you hourly? Are you self-employed? So we look at all of those angles to make sure that we're following the guidelines correctly for you as well. So we look at all of that up front versus after you've written an offer.
Perfect.
Yeah. And then again, I have a team. So we do also try to stay in touch with you that if you can't get approved now, and we think that you can, if I say, let's say you want to get pre-approved for 350 because you've gone online, you've done some research, and the homes that you like that were going to best fit your family are around the 350 price range. But let's just say I can only get you pre-approved for 275 today. And so basically what we like to do is kind of give you like a roadmap. And we'll say, in order to get your goal of 350, here are some options. They're going to be ABC. How long do you think that's going to take you? And then we'll continue to follow up with you. We don't leave you hanging. We're always here to help. And we, just reach out if you have any questions along the way.
That's perfect. I really like in working day to day with you and your team, communication's never been a problem whatsoever. And that's one of the things that I know all my clients feel this the exact same way. So that's a huge value point for sure.
Yeah, it's usually buying a home is the biggest investment, biggest purchase you're going to make in your life. So it's important to have somebody that you can speak with and that is going to get back to you.
Definitely.
Yeah, it's a huge deal.
So what are some solutions or some quick fixes that we can do to help increase our credit score?
Yeah, so just to increase your credit score without looking at your report or what it is, a lot of times what we usually see are maxed out credit cards. And so anytime you've maxed out your limit, that is negatively impacting your credit score. It's going to drive your score down. The best course of action would be to pay it down and not close it. So either pay it down and keep the limit at about 30% or less of your limit. So keep your balance at 30% or less of your limit. Or if you can, pay it all the way down. And then the other little trick, I feel like a good amount of people know that. That's fairly well known to keep your limit, your balance at about 30% or less of your limit. Another piece is like a little trick that I like to say, tell people is that you want to look at your credit card statement. And usually if you just log into your app, you can download a statement, right? They're not going to they don't usually send you one. So you have to log in, download the statement. It's going to have dates on there, just like a bank statement would. And so there's a beginning and an end date. If you want to pay that statement down prior to that statement end date, that statement end date is telling you when that credit card reports to the credit bureaus. So if you pay that, typically after that date, it's going to take another 45, 30 days, depending on how often they report, to reflect on your credit. So it might be a little bit slower. you can usually expedite your credit going up if you pay that before then, and you don't wait until your credit card due date. So that's a quick, yeah, that's a quick way to get it going. Also, just again, make your payments on time. That's the easiest one. That's, you know, a big 35% of your credit score is your payment history.
Even if it's just the minimum payment, just making that on time every time.
Your payment on time every time. Just don't miss a payment. I like to think of credit scores as like when you were in school, it's kind of your report card. It is your report card of how you have kept your promises. You know, you took on, you asked for a loan and somebody said, okay, we'll give you a loan, but you have to promise to pay us $300 every single month until it's repaid. And it's like, yeah, I can do that. Did you keep your promise? And so it's going to report if you did or not. And those things are going to stay on your credit report for 7 years. So it keeps a good long history of what you've done.
Mm-hmm.
History tends to repeat itself. And so that's why we look at that piece. So
For
strong.
sure.
Yeah.
As far as getting another like kind of quick solution to help get somebody's credit card paid off, I'm thinking about using closing cost credits and
on a VA loan. Yeah, that's a good cool one. Again, another cool piece of VA loans is that you could potentially, especially now that we're shifting to a buyer's market, which we haven't seen in such a long time. If you are asking, you can ask for up to 4% of the purchase price in seller credit. And if you can pay off a credit card at closing with that seller credit. So it's pretty amazing.
There's lots of benefits that you could do with that 4%. I mean, that's a huge amount of money. If we're looking at $300,000 house, that's $12,000.
Yeah, exactly. You can use that seller credit to obviously pay for your closing costs, title fees, appraisal, your homeowner's insurance, a year of your homeowner's insurance plus 3 months, taxes for the year coming up, those things. But you also can use it to buy your interest rate down. You can use it for what's called a 2-1 buy down, which is essentially like a temporary buy down where you're using, let's just say you get locked in at like a 7%, and then your first payment is based off of 5% for the first year. The second year would be 6, the third year would be 7. But your seller the money from the seller is paying for the difference between those two. And then if you refinance within those 2 years, you're fine.
So it sounds like that could be almost like an insurance policy on hopefully,
Yeah.
the rates drop at some point in the next 2 years.
Yeah, exactly.
Cross our toes.
I know.
And, we get to a point where interest rates are a little bit lower, we could refi for even lower in the future and, live a little bit better in the meantime.
Yeah.
So that's a pretty huge benefit for right now.
Yeah. I think it's kind of the benefit of the market at the moment, if you want to chat about that. Kind of the benefit of the market right now is, as I've mentioned earlier, it is shifting, and you can comment on this too, because you are on the front lines, is it's shifting into a buyer's market. So the difference, there's a lot of differences now, the market today versus the market during COVID and like 21 and 22, where in 21, 22, yes, you were getting lower interest rates, but you were paying, I mean, I saw $50,000, $70,000 over asking price or over appraised value. You were covering all of your closing costs. It's going to take years to recoup that much money that you spent and your monthly savings that you got with that lower interest rate, where today you can negotiate on the price. You can ask for seller credits and you can get the home that's right for your family. You have time to choose. You don't have to jump at the first one that comes to the market. And then you can refinance down the road.
Well, the hits just keep on coming with that, though, because while they were making all those other concessions to get that house, they were also doing things like taking the home as is, not getting any repairs done. And then now they've been living at a disadvantage, paying exorbitant amounts of money for this house without having any repairs done. And they've been living in Alaska. They've been enjoying their time here. And it's going to be time to leave here already. And they're turning over homes that they've not had any repairs made, and
deferred maintenance on those.
Yeah, deferred maintenance. You can't have deferred maintenance here. Right. So we're in a situation where now sellers are turning around and selling homes to buyers, and they've got these huge repair bills. So the margins for these buyers are very, very slim. And then when these buyers turn over to sell, the margins will be even slimmer.
Yeah. So you're
And
not seeing, they don't have a large profit margin is what I hear you saying. And they're not
yeah,
looking for that. Yeah.
so it's just cutting off. We had one good year, or one good turnover round of people, sellers making really, really good money on their sales. But I don't think it's going to last for very long.
Mm-hmm. Yeah.
Because I mean, I don't want to say like there's a bottom falling out of it or anything,
Mm-hmm.
but every time the margins are getting slimmer and slimmer.
Yeah. Yeah. We're just not seeing, they're still expected to, or they're projecting to have homes appreciate, but at a normal rate, at like your typical 3 to 4%, not at your 15 to 20% that we saw during COVID.
Yep.
Yeah. Yeah.
That would be nice, but not so nice.
For some.
Yeah.
Yeah, exactly.
So that's about it. Bethany, thank you so much for sitting down with us and talking with us about, finding some solutions to overcoming some problems that might keep us from getting pre-approved, and finding some solutions to help us, kind of get out of the situation that we're in already. Help us get to Alaska, help us, realize that dream of moving to the last frontier. If you want to get to Bethany's application page, it's down in the description. If you'd like to talk with her, I've got her contact information down there as well. If you have any questions for me or for us, give us a call, 907-885-0316, or you can check us out at www.fbxhomesearch.com. Thank you so much and have a great day.